Well, welcome to another episode of Breakaway from the Rat Race. And today I have the pleasure of speaking with Pasha Esfandiary. Pasha started his career in real estate in 2011, flipping homes, found that the auctions starting in Nevada and then in California. Pasha has since been involved in over $250 million in transactions across all kinds of different asset classes, like residential homes, boutique motels, purchasing and management of large multifamily properties, and mobile home park communities. Pasha is also the co-founder of Evoke Capital and an ex-professional poker player. Pasha, welcome to the show.
Thank you. I appreciate being here, man.
Well, it's a pleasure. I think one of the things, 2011 and 2000, this is a very short period of time. A lot of people are telling me, oh, it takes forever to kind of grow and make millions of dollars in real estate and stuff like that. I mean, you started your career in real estate in 2011, and here we are only like just a little bit over 10 years later through a pandemic, and then here you are, $250 million in transactions across all these different asset classes. So tell us about kind of like, obviously it's possible.
Yeah, so, of course.
Tell us about that, kind of like that mindset, how you got started in 2011 and, where you came from and why you decided to go in that direction.
Yeah, sure. I would love to. Actually, I would love to paint a little bit of a picture of, speaking to the audience, when I was 26, and this is no exaggeration at all, I was very depressed, really kind of going nowhere very quickly in life. I had decided to stop playing professional poker at that time. I was living in my dad's condo in Las Vegas, and 2011 rolled up. And I always knew I wanted to get in real estate, and I quit playing poker, and I quit chasing the poker dream. And I knew I had to start on the bottom because I made good money in poker, don't get me wrong, but I also blew it as fast as I could. Like, I was good, but I also blew the money. I had no bankroll management or money management at that time. And so that was kind of a hard pill to swallow. And like everything, the way I approach life is I want to get an education first. So I went and got my license because I needed, the data from the MLS, and I wanted to start that. But I am also good with people. And so I had a pretty vast network just because of my poker background. And I started to be a salesman or a broker at that point. I didn't intend to be, because I only wanted to do it as an investor, but I made some pretty good money doing that. I made some money playing poker, and I started saving up enough money rather kind of quickly, within about 6 months, to go and flip my first home in Las Vegas. And I did that in 2011 while I was also trying to really learn who I was as an adult and relearn everything and get out of my depression and relearn about my psyche, about emotional intelligence, about the world at the same time, which was quite a interesting time. So I can say that, you can kind of start off anywhere and really create your dreams. And, from there to now, I still pinch myself thinking about it.
Well, I'm just shocked that you were depressed. I mean, we've met a few times, and this guy is like full of life, fun, and I'm just shocked that this is how you were before.
Yeah, it's actually, it's quite fascinating because I tell people this now, but the majority of my life, I was severely depressed. I was very shelled up as a human, really. A lot of just like childhood trauma, and it just stuck with me. And how I translated that into myself was I shelled away from the world. I shelled away from relationships. I shelled away from really putting myself out there, and I was so afraid to fail at that time. I learned all of this through my personal development journey. But yeah, if you met me back then to where you met me now, it truly is night and day, and I'm not exaggerating whatsoever. I was on social anxiety medication,
Wow.
all of it. Yeah, it's quite fascinating. But what I will say, being here now, I choose to be lively. I choose to be energetic. I choose to live the life that I do now because, and only because of my past. And I'm so grateful for that. Right. Like, so hard times suck, but when you get over it, at least for me, I've always those moments have been the best learning lessons that I've been able to take away for the rest of my life.
Yeah, I guess you kind of like, you appreciate and you're grateful that, okay, well, things are going well now, and then you kind of but breaking away from that pattern and of depression and kind of like a downward spiral, I guess, would
Yeah,
so that's good. So yeah, so you're saying, well, yeah, so it's definitely a journey, I'm sure.
it was.
Yeah, so
It
that's
was.
great.
I
Go ahead.
have this thing. I don't know why I'm even bringing it up, but it's everyone kind of makes fun of me for always saying it, but every single day, and this sounds cliche, but it is what it is. Whatever, it's my life. I say this is the best day of my life, and I say that at least 20, 30 times a day. When any little good thing happens in my day, I say, man, this is the best day of my life.
Oh wow.
And like, even though like it just does, like in that moment, I know I'm being silly, but subconsciously, I just have great days.
Yeah, yeah. I mean, I used to with my kids, and even sometimes with myself too. Like I just like when they were angry or they were upset or whatever, stuff like that, I said, just smile and try to be angry while you're smiling. It's amazing how, your physical is impacting your emotional.
Yep.
You just can't be angry, upset, and stuff like that if you force yourself to smile, and it's just impossible. And yeah, go ahead.
If it's one thing that I've really learned, given the background that I have, you can really and truly train your subconscious to be any certain way. That's the cool thing about being human.
Yeah.
We can train ourselves to have any kind of attitude. And so it takes hard work, and I'm not taking away from that. Some people are in really, really bad situations, but perspective is everything. And, I'm not trying to preach from my like high horse here, but we can change ourselves. We have the ability.
Yeah, and sometimes you have to seek help and stuff like that. There are professionals out there that can help you do that, but know that it's possible to change and to get out of these bad situations or bad mental situations.
Absolutely.
So basically, and then you grew from that, and then you basically exploded over after a few years into all these different asset classes. So what brought you, for example, to invest in a boutique motel and to multifamily business apartment buildings, I suspect, a mobile home park? And so what brought you into these other asset classes, and why did you choose them?
Yeah, I think something to really note here is I did residential and I did flipping and land up construction for many, many, many years. I think really at the end of the day, it became too slow for me. I have ADD. My brain works like all the time, nonstop. And I really realized that the slow results for me weren't conducive to like a lifestyle that I wanted to have. I wanted to be able to take down bigger deals. I wanted to, have faster results, aka rents or things happening, expenses, whatnot. So once I really understood how my brain operated, I really tried to change my life into making that happen. The boutique motel is actually quite an interesting story. I met my now partner at a Tony Robbins seminar in Fiji, and he was a broker in Las Vegas, and I had called him, and he had taken down one motel already. And I said, hey, I'm looking for about like a 30 to 50 unit apartment that I want to take down for myself. And he goes, you should buy this motel. And I said, I don't really want to buy it. I'm okay. He goes, Pasha, you should really look into this. The numbers are here. I have a motel literally right down the street. Let's partner up. I said, honestly, don't want to do it. And the guy was persistent. He goes, why don't you do this? Just come down to Vegas and let me show you. So I said, you know what do I have to lose? Let me go. And when he took me there, I saw the numbers, I saw the operation. I said, hey, there's something here. And so we ended up partnering about 2.5 years ago and bought this motel. So, I mean, we've done very well with that motel. And we survived the pandemic and everything kind of went along with it. There were some hardships there, but now we're at the end. We literally just got done with all the renovations and whatnot just recently. And then so for my multifamily journey, my goals are changing. I'm becoming an adult, and we want to have kids, me and my wife, and I wanted to create more of a passive income stream. So I translated I'm selling off my residential portfolio and moved it all into multifamily apartment complexes. And I chase yields. I don't care if it's sexy or not. I just chase yields and how hard does my money work. And so that led me to the path of mobile home parks. And I just saw it as a better investment in so many different ways. And so I bought a few apartment complexes and strictly mobile home parks. And now Evoke Capital, my company, we're now doing some syndication. We just recently did a few syndications. So
I love mobile home parks. I have never invested in one, but I looked at numbers all the time. Yeah, they're just phenomenal. But tell us some of the reasons why you think mobile home parks are one of the best investments that you have.
yeah, I think the low hanging fruit here, Eric, is that from apartment complexes you have a lot of turnover. And with mobile home parks, there's a lot less turnover. There's some stat that about 50% of people who've been living in mobile home parks have lived in their home for more than 14 years. That's consistent cash flow. I love consistent cash flow. So, and then your repairs and maintenance are a lot lower, because we only own the land and not the mobile homes. The tenant actually owned their own mobile home, so they fix the problems that arise. So we just own the land. Secondly, or thirdly, it's less competition. There's more stigma around it. It's, given my poker background, there's something that I really learned. I'm not the best poker player in the world. I never wanted to be, and I never actually cared to be. All I cared about was what was called game selection. What games are you playing and with who? And that's all I cared about. And this is kind of how I do my real estate investment, game selection. I can operate in secondary and tertiary markets. I can operate under institutional money. Not everybody is chasing this, so there's less competition.
Yeah.
And there's higher yields. It's not as appealing. It's not as sexy to everyone else. And that is where I make my money.
Yeah, that's true. In terms of turnover, I mean, even though they're called mobile homes, they don't move.
Yeah,
or they rarely move.
In practice, they rarely move. I mean, it does happen, but they rarely move.
Yeah, exactly. So that's definitely turnover. I mean, it's their home. They live there, and this is their neighborhood. The land is basically owned by you, and land is relatively cheap to maintain. You may have amenities like laundry area, pool, and that kind of stuff. The other thing too that I like is some of them, you have the opportunity to own some of these mobile home and rent them out as well. So if you have a lot, you are able to just buy a mobile home and then rent it out for additional revenue. You also can expand, like a lot of them have extra space, extra land that they have undeveloped. There was one place near Seattle that I was looking at, and they only half the land had been developed. And it was just like, wow, this is a gold mine. It's just like, I didn't buy the gold mine, unfortunately, because to me it was like in the middle of nowhere. It was like south of Red something, I forget what it was, Redmond or something like that. And so I was just like, it seemed a little bit too far away from everything. It was in the woods and all that. But so that's why I didn't invest in that. But this is another potential as well. You have additional land that you can develop, additional development that you don't have that in an apartment building. It's very hard to. It's very rare. Let's just say, and
very rare. Yeah,
exactly. So that's great. Yeah. So and this is great because this is value add. So you seem to be focused a lot on value add and really getting the maximum out of the property or the investment that you do. So
yeah,
it's a great strategy.
I think in the traditional sense, the value add in mobile home parks are to find something that has very little vacancy, let's say 50% occupied and 50% vacancy. And then you go and find mobile homes and you put them onto the park. We as Evoke, we actually have a little bit of a different model. We don't look for that. Where our expertise is operations. We're great at operations. We will do some infills. But typically when we're dealing with these secondary and tertiary markets, we're still operating with mom and pop sellers. So their operations are just a little bit haywire, to put it for lack of better terms. And so we go in there and we clean it up, and it's, really great business because typically the market rents are so under and we have so much room to grow. Now, I do want to say that with a caveat, there's a lot of operators out there that go and pop up rents 100%, 50%. We do not. We definitely do not do that. We do steadily increases where our typical average raise is about $30 to $35 per year, because there are some predators out there. But still, even then, let's say, for example, you find a property that has the lot value of, or lot rent at 300. Even if you're raising the rents $30 per year, you're still increasing the rents by 50% over 5 years. That's a massive increase.
Yeah.
Right. So there's our value add.
Yeah, no, that's very good. And so Evoke Capital does the syndication of these deals, these mobile home communities.
Yes, only mobile home parks, and we just started syndicating.
Okay, well, that's great. Yeah. So I want to go back to professional poker player and how I'm sure this can apply to business and how people, I mean, to me, it's all about risk management. And, we're in a kind of a weird economy. And how does a poker player think about this, about the inflation hand and the interest rate, the Fed, how they're going to play their hands and all that kind of stuff. So how do you see the world, the economy, and how do you play your hand when you're looking at what's going on?
Yeah, I think that's a really great question. And I think my answer is going to be oversimplified, but I'm just going to go ahead for it. So yeah, inflation's, here. I mean, it's like an obvious no-brainer. We printed so much money. I'm shocked when people are shocked that inflation was going to happen. We knew that this was coming, and we knew interest rates were going to come so that we can try to get out of some of our debt. Like, this was just things that were concrete and was going to happen no matter what. When on a macro level, I guess, from the way I look at things, just because of my poker background, I take things as they come. Okay. And so right now we are in an inflationary period. We have due interest rates are rising. So the way I look at it is, I think there's two camps right now. People who are still buying because they're still attached to the same values that were about 5-6 months ago. And they're like, hey, there's some good deals right now. And there's some who are thinking this is doomsday scenario. I'm pretty even keeled emotionally always about my investing. And so I am still actively calling brokers every single day, trying to find deals. Because at the end of the day, a good deal is a good deal. A good cash flowing deal is a good cash flowing deal. A good deal that has still lower market rents. And because of the area that I operate in, which is more of the lower income bracket, I still have a lot of room to grow, where I would say my risk is leveraged, right? Or deleverage. And so, but when these multifamily, like A-class properties, you have to be a lot more careful.
Yeah.
And so I choose to operate in an area where there's less risk long-term. And I am always strictly a long-term investor. I'm not looking to get in and get out. I would be nervous as an operator if I did that. So these things always happen. I think, hey, we're in this period. Let's be a little bit more careful just for short-term volatility. But because I'm a long-term holder, Evoke, what we do is we hold for the long term. We don't try to flip it real quick. And because of that, we're still going to be buying.
Yeah. I totally agree. I mean, I'm a long-term thinker and investor as well. I mean, this is, even though I make some short transactions in the meantime, but I'm always thinking long-term. I'm thinking about multi-generational wealth. A lot of my time is spent on that part of it. So I'm not thinking just myself, my kids, but I'm thinking about my grandkids and kind of how that's going to affect them. I'm really setting them up for success from that perspective.
Of course. There's this quote that it stuck with me. One of my mentors said this, and I'm talking about uber successful, worth a B. And he just said, Pasha, get rich slow. There are no shortcuts. Get rich slow. Don't try to find the one gem property or this one gamble. Just get rich slow through real estate. Learn how to recycle your money tax-free. Learn how to keep multiplying your properties and your assets. Because what's going to happen is, no matter what, just the way our economy is set up, we have to print more money to create more GDP. And it's actually lopsided. It's like a 3-to-1 ratio for how much we print to what GDPs grow. So when you have these oversimplified models, you just say, okay, like in my opinion, then I'm just going to go buy good assets and let time do the work. Get rich slow.
Yeah, exactly. And especially I mean, you're looking at people that were trying to make money quickly in cryptocurrency and stock market and all of that. I mean, these were great markets, but you have to think about, if you think like a poker, you want to make sure that, you want to take some of that money off the table, and then, you let the rest of it ride. And I don't know if it's really a poker thing, but it's
Well,
a gambling thing in general, I
yeah,
think.
it really is. I think you bring up a really good point. In poker, you are trained mentally to understand that short-term volatility does not matter. It doesn't, because sometimes a 5% will get there. You put in your money, right? You shoved in, and that person had a 5% chance to suck out on you, right? You just are absolutely trained not to care about short-term volatility. And that is how I look at everything. Because if you make the right decision over the long period, that's what sets a good poker player and a bad poker player apart. And I will always make good long-term bets. And that's how I look at my investing. And that's how I look at all my properties.
Oh, this is very good. Because this is a very good quote. I think you should write that down in your book. Because people think that, oh, I made a bet, I made a decision to invest in this thing, and this thing failed, right? So I made a bad decision. I made a bad decision on that investment. But sometimes it's you made the right decision, but the environment, blah blah blah, some things happen. And it turns out that you lost some money this year or next year over the 2-year period. It's still a good decision. It's still a good decision long term. Yes, it sucks right now, but long term, this is the right decision. And I think that's where people kind of get lost a little bit. Is that, oh, I invested in this single family rental, and then the tenant moved out, and I had to pay $2,000 to clean it up and stuff like that. And it's just like, it sucks. Yeah. But that is still a good investment. It's still a good 20 years down the road, 10 years down the road, you're going to look back and say, oh, I'm glad I have this property.
Short-term variance should not matter.
Yeah.
All you're caring about, if you zoom out on a graph, it just, everything kind of goes up pretty slowly, right? Yeah. But when you zoom in really, really deeply, there's so much volatility. And that's kind of with poker, same thing. Also, I learned in poker that if you make a bad decision, because it will happen, you will fail. Like you have to fail to get better. You have a peer group to say, hey, did I make a good decision, bad decision? And you learn and you grow from it.
Yeah. I think that's very good. Put that in your book, please.
Yeah, I will.
The other thing too I want to talk about is kind of like the A class. I mean, I invest in B and C class, kind of what we call the workforce housing.
Yes.
This is great. And I think if you're stuck in the A class in luxury kind of housing, when a recession hits, a lot of these people are going to kind of like move down towards the B and C class. So this is something to keep in mind as well. And this is why we invest in the B and C class. When the recession hits, the B and C class, they get very strong and they're very stable. But the A and luxury kind of like rentals, then it gets a little bit harder for them. Even the luxury homes also get, their prices drop a lot faster than the B and C class homes.
Absolutely. So, but it's true. You just got to understand your own risk profile and understand who you are, because some people like that risk profile. They like where in an appreciative market, they're capturing much more appreciation. Right. And so it's a different game, but I'm with you 100%. I like to mitigate my risk. And that's why I work in workforce housing. That's why I'm in mobile home parks as well, too, because my risk is mitigated. I may not capture all top side appreciation, but I'll capture 75, 80%. But on the downside, I'll essentially stay flat and be totally fine. And I sleep well at night.
Yeah. You mentioned also kind of like mentioned bad decision or something, good decision that turned bad. You mentioned also that throughout your investing life, you were broke more times than you could count. And I'm always fascinated by that, because I keep seeing like people that like massive real estate investor that had like billions of dollars in investment, like in Canada or the US, and then they go completely bankrupt. And then 5 years down the road, they're back up to where they were. And it's like, how does that happen? So, so how did you go through some of these times, these difficult times where you were broke, and then you kind of like, okay, regroup, come back? How do you get back on track?
I mean, I would probably bet that I've been broke more times than any other person you've had on your podcast, just because of my poker background. There's been nights where I've lost 150% of my net worth which is what we
Cool.
call it's pretty brutal, right? And then I would owe that money, and I would have to work it off or play more poker and pay the person back. I have just learned thick skin. There's like, when you have goals in life, you just have to pick yourself up. I don't have a magic formula to say, oh, I did this. I just said, okay, I reset it a lot. I think the word here is just resilience, right? If I had to describe my life in one word, because you just have to regroup and say, okay, where am I right now? Get a baseline. Where do I need to be? And then now I have new information, and you put one step forward, and you just kind of keep growing, and you kind of keep growing. And I had a lot of these these financial swings in poker, and that's why I got out of it. But anytime you take a loss, you learn from it. You pick yourself back up, and you just keep going forward, because we're still alive, we're still human, and we still have a lot of time. And I think truly people underestimate how much you can create in 10 years. And giving the examples that you were talking about earlier,
you're the proof of that.
I am.
Starting in
Absolutely
2011.
Yeah. I have a interesting story in 2011. 2011. I actually wrote my goals down, my 10-year goals. I had a mentor that said, write down your goals, not just what you want to be doing, but very vivid. The smells, the people, how much you have in your bank, what you're doing, everything down to a T. And you have to understand, at this time, I'm still working on myself. I'm still learning how to be Pasha, right?
Yeah.
And when I moved from my previous home to this new home, I found that journal. I had accomplished everything in 7 years. That I dreamt that if I accomplished this in my life, I'd be happy and set forever. Now, things, obviously, the goalpost keeps moving forward. I can't help it,
Yeah.
But it really is truly astonishing what you can create. And I'll tell you right now, I feel like I could have created more. I could have applied myself more, but not complaining.
Yeah. So what do you think is the key really to resilience? I think so. Let's say, it's terrible economy, and then you lose everything. You lose all your assets. You lose your money. Like, how do you get back on track? What is the one thing or a few things that you would need in order to kind of like get back on your feet stronger than you were before?
I think, okay, first of all, to come back stronger than you did before, you have to create a baseline. You have to say, hey, the past is the past. Sounds very cliche, but it is. You got to take inventory of yourself and say, this is what it is. What are my new goals? What do I have to accomplish now? You have to forget about your previous goals, write down some new goals, and you got to stop making slow progress. I'm a big momentum person. If I'm not progressing, I literally feel like I'm dying. And that's just the way I've trained myself to be.
Yeah.
So for me, it's just about picking myself up and making new goals and hitting new targets, whether they're smaller, but it is a snowball effect, man. I want anyone to hear me here. It is a snowball effect. Start hitting those smaller goals, but make sure you know what your 10-year goals or your bigger goals are, and work yourself backwards towards that goal. But it's all about taking one step forward. And that sounds cliche, but it's just the truth for me. You pick yourself up, reset, you keep going.
Yeah. So what if you were to talk to people right now that are kind of like they want to get started? Maybe it's in the real estate investing or anything like that, and then they want to. So what do you think they would need to know? Or it's a mindset thing? Is it like, maybe it's more a mindset thing. Maybe it's some skills that they need. What do you think they need to know and write down on paper or something like that to kind of like set themselves on the right track to find the path forward that's going to be good for them?
Yeah. Let me tell you a funny story. When I first started getting into real estate investing, like my first, I was like, I'm going to do this. I was living in Vegas. I don't have my license yet. I just figured, hey, things are for sale. I walked up to somebody's house that had a for sale sign on it, knocked on the doorbell, and he opened the door, and I'm with my buddy. My buddy's standing like behind me because we wanted the same goal. I was like, I want to buy your house. And he goes, and I'm a young kid. And he goes, okay, where's your broker? I'm like, what's a broker? Like, I don't have one. He's like, are you qualified? I'm like, qualified for what? He's like, for a loan. I'm like, no. He's like, well, do you have cash? I'm like, no. And I look like such, I mean, to me, I was just like dumbfounded. But that was the first thing I did. I said, oh, I need a broker. Oh, I need to get a loan. How do I do these things? So it was like, I was learning as I was going because I knew I had the goal in mind. So one is just don't be afraid to fail. Right. And at the end of the day, people are so scared to put themselves out there, but like, no one's going to remember, right? Like who cares? And then on the mindset part, look, I'm going to refer back to my poker background. In poker, if you're not aggressive, if you just sit back and do nothing, you get blinded off. This is like the best analogy for life and creating goals that I could ever think about. If you're playing a poker tournament, which a lot of people have, if you don't make any moves, if you're not getting cards, it's not coming your way. If you don't try to be aggressive and steal some pots and try to mix it up, you're going to get blinded off. And that's like such a good analogy for life, in my opinion, because you have to get in there. Now, the great thing about real estate compared to poker is that poker is a game of incomplete information and you're always guessing. But in real estate and the internet and all these podcasts, there's so much information out there for you to go and make good investments. Go figure out what your goals are, go get some education on it, understand your numbers, and go attack it. And one thing, lastly, I want to say about this is when I first got into real estate, because I wasn't such an analytical brained, or I don't have such an analytical brain, I held myself back at first. But I just put the effort in to learn the numbers down pat, to go after it. And now I'm able to work with a team where I can just really go be with people, go be with investors. And I have people who are better than me. And that's totally okay, doing the numbers and the analysis and whatnot. So
no, that's great. I think when you're talking about the incomplete information, I think, I mean, definitely poker is you have definitely a lot of incomplete information. Real estate and a lot of investors too, we also have incomplete information. Obviously we have way more information, right? We have access to Zillow and Redfin, all of that. We have way more information and we can get more information, but there is still incomplete information. You're never going to have 100% complete information about certain things. And but I think what's important is that you can still move forward. I mean, you can't wait to have all the information and then that the interest rate it's going to go up and the interest rate is going to go down, or or how long is the recession going to be, and blah blah blah, that kind of stuff.
Right. In that context, I absolutely agree with you. But I think the way when I was reading it, in the context of if I'm going to go buy a home, I can have complete information because I can go do my inspections. I can get 99.5% of what I need to do to make that decision. But absolutely, if you're sitting on the sidelines afraid about what the world's going to do and what's going to happen, then, you just can't think that way. That's analysis paralysis, and you'll get blinded off and you'll lose all your chips in the long run.
Yeah. And I think in terms of failure, I mean, I think people are kind of like, they're afraid to fail. I think it's important to fail, but I think what's important is like fail small, fail with small things at first. And that's why I recommend a lot of people do like single family rentals or something like that. And if that doesn't work out, you lost some money, but you didn't lose like millions of dollars, and you didn't put yourself into, put your whole house at risk and all that kind of stuff. Just fail small and really just put an offer on a house, and then, and you're going to get your EMD back and stuff like that. You're going to get familiar with the transaction, and that, I did get my EMD back. And but then do more transactions, and then make sure that it's going to cost you a little bit of money, but you're going to fail small. You're going to feel more comfortable, and then eventually you're going to get more. It's going to become more familiar for you to do the bigger transaction. Just a transaction with a little bit more zeros at the end. It's the same.
It's interesting. Everyone in multifamily says, like, every summer I've ever been to, they're just like, start off big because it's the same exact amount of work because, this and that. And I just say, there's a little gray area there. If your risk profile isn't there yet, Start off small. I completely agree with you. And just know that you're going to get to your goals eventually, because time, like there's so much time to do this. So go start off with a single family, go start off with a duplex and work your way up if that's what you want to do. I do agree though with their saying it is the same amount of work, whether you buy like a 200 unit mobile home park or like a 50, it's the same amount of work, just different zeros.
Yeah.
But I had to work my way up. A lot of people had to work their way up on this, and go fail small. Eric is absolutely correct. Go make mistakes, but I actually would advise, and this sounds cliche, it's not a mistake, it's an education. And you want that education, absolutely. And you're going to keep working towards your big goal.
I've had a lot of education.
Yeah,
so have you, I think.
So 100%. And you have to, you're going to like, do not think you're going to get into this like realm and this field without making some they're perceived mistakes, but they're just a growing tool, just a growing toolbox of growth and things that you will not do next time.
Yeah, exactly. You mentioned a couple of times the word mentor. You had mentors for throughout your life. Tell us about kind of like the importance of mentorship to you.
Yeah, I mean, there was one point where I don't know shit, right? Like, this is the cool thing about real estate. I'm not the smartest person in the room ever. I always try to absorb everybody else. I'm always trying to learn from everybody else. The coolest thing about real estate, Eric, like this is like the one thing I love about this industry is that everyone's willing to help each other. Everyone's always willing to mentor the next generation.
Yeah.
But what's astonishing to me, and I'm not kidding you, I have offered to mentor at least probably 50 people in my life that are close to me, and people, and I'm talking about these 50 people are like, I'm definitely going to do it. I'm going to hit you up. We'll start next week. Like, I'm really going to learn from you, like that kind of enthusiasm. And I'm not kidding you. One person took me up on that. And that
people don't follow through.
No one wants to. It's crazy to me. It's crazy to me. Like, I have so many mistakes that you can learn from and not to do. And I have a formula that just works. And so it's really up to you.
Yeah, absolutely. That's true. I mean, this is about taking action, following through with your goal. Yeah, I mean, I talk to a lot of people too, that they want, I want to mentor you. They set up a call and then we talk, and then just like, no follow through.
Yeah,
they don't show up even for the call.
It's crazy to me. It's actually astonishing to me. There's this thing that I do I don't know where it came from, but I've always asked myself, I think everyone asks themselves, what do I want to do? I always ask, what will I regret not doing? Right? Because I always work from the opposite down. And I hate to sound morbid, but I know I'm going to die one day. Even though I do love biohacking, I'm going to try to live as long as I can. But because I know I'm going to pass away one day, I never want to look back on my life and say, I have regret, or I wish I did that. It's just a more powerful question to ask yourself. If you're going to regret not getting into the game and not doing your first property, just know at some point you're going to massively regret that in your life. Yeah.
I was at a conference in San Francisco last week or 2 weeks ago, and everybody, one of the question about kind of like was, okay, what would you die for? Well, I would die for my family. I would die for my country. And then you just flip the question around and say, what would you live for? And just like, and everybody's like, wait, this is completely different. But everybody's willing to die for things, but what would you really live for? What would be the thing that would drive you to live a better life? Yeah. And that was not so easy to answer and tell me.
There's one more thing I forgot to add about mentors. When I first got my education about real estate investing, I went and volunteered for a mentor of mine. He's like an uncle to me, for 3 months for free. I went to LA, got a place to stay, and I just mentored for free. I'm not mentored. I was just
intern kind of thing.
Intern for 3 months, and I just did whatever he wanted me to do. And once a week, at the end of the week, he would just have a sit down with me. Hey, what did you learn this week? What are some questions you have for me? And that was it. I just met with him for 1 hour once a week, but I got my education in his business, and I volunteered my time, because education and experience is the most important thing that you can do.
Yeah, I totally agree. And that's the best way. I mean, there's a lot of courses out there, a lot of things going on, but to me, mentorship is so much better because it's just focused. It's kind of your personal coach. I mean, this is like, it's focused on you, your need, where you want to go, as opposed to a bunch of information in all kinds of different directions.
I have like 5 coaches in my life.
Oh yeah,
probably even more. I mean, I believe in the power of coaches. I believe in the power of the mentors always.
Yeah. Well, Pasha, it was a very interesting, a great conversation. So thank you very much for your time. Is there anything else that we didn't touch on that you want to mention before we wrap up?
No, I mean, if you ever want to get in contact with me, you can go to my website, www.evocapital.net. You know, other than that, nothing much. I really appreciate being here. I really hope I did some kind of impact for anyone that was listening, and just know I was there. You know, if you're thinking about doing something, you don't know how to do it. I was there. Like I was easily there 10 years ago.
Yeah, exactly. And thank you for being transparent also about kind of the personal aspects of your life. I think that's going to help a lot of people kind of know that there's a bright side. There's just like, keep at it and take action.
A lot can happen in 10 years, man. A lot.
Exactly. Well, thank you, Pasha. Have a good day.
Thank you, Eric.
Thank you for listening to Break Away from the Rat Race with your host, Eric Martel. If you want to share your story and experience with our listeners, please message us on Facebook at Break Away from the Rat Race. Also, please subscribe to our YouTube channel and our podcast on iTunes.